Hello and welcome to Real Estate in Real Life, Ann Arbor. I'm your host, Ann, and joining me is my co-host, Faruk. We're excited to bring you insights into the dynamic world of real estate investing, along with the real-life stories that shape our vibrant community. In this podcast, we'll delve into Ann Arbor's unique market landscape, from trends driving property values to the local factors that make investing here both challenging and rewarding. Whether you're a seasoned investor or just starting out, our conversations aim to equip you with actionable tips and insider knowledge to navigate the market with confidence. Ann Arbor isn't just any city. It's a hub of opportunity, home to a renowned university, a thriving local economy, and a rich cultural scene. The city offers a diverse range of investment prospects, and today we'll explore how these elements come together to create a market ripe with potential for growth and innovation. So let's get started.
Let's dive into the numbers. Ann Arbor's housing market is showing strong momentum right now. The average home prices in our area has reached about $450,000, marking a significant jump in recent years.
That's impressive. And on the rental side, demand continues to be robust. In the city center, a typical two-bedroom apartment is renting for around $1,980 a month, while in neighborhoods like Burns Park and Old West Side, rents tend to be closer to $1,700 monthly, supporting a healthy rental market overall.
When we look at the key neighborhoods, each has its own unique appeal. Take Carytown, for example, known for its blend of historic charm and modern upgrades. Properties there are averaging around $500,000, with an estimated 8% year-over-year growth. Meanwhile, the Old West Side has seen property values jump around 10% over the past year, thanks to its eclectic vibe and proximity to downtown. And in Barnes Park, a favorite among families, homes are typically valued around $430 due to the area's excellent schools and community feel.
Demographically, Ann Arbor is a dynamic mix of young professionals, families, and University of Michigan students. This diversity fuels a strong rental market evidenced by current vacancy rate of roughly 4%, which is significantly lower than the national average.
On the economic front, Ann Arbor benefits immensely from the presence of the University of Michigan, which drives research, innovation, and job growth across multiple sectors like technology and healthcare. The city's unemployment rate remains impressively low, around 3%, adding a layer of stability that investors find very appealing.
And let's not overlook the exciting local developments on the horizon. With major infrastructure projects like enhanced public transit and downtown revitalization plans in the pipeline, the market is poised for even more growth, offering fresh opportunities for both buyers and investors.
In summary, with strong property appreciation, healthy rental demand, and stable economic foundation, Ann Arbor's real estate market is vibrant and full of potential.
Up next, we'll explore specific investment strategies that you can leverage in this promising market.
Let's shift our focus on the different investment strategies available right here in Ann Arbor. Now we are going to dive deep into the variety of approaches, from rental properties to fix and flip projects to long-term holds, and discuss how each strategy can work within our local market.
Let's begin with rental properties. Ann Arbor's steady influx of young professionals, families, and students creates a high demand for rental units. When you invest in rental properties, you're setting yourself up for long-term passive income while also building equity over time. In neighborhoods like Burns Park, where quality schools and family-friendly environments attract consistent tenant pool, rental properties can be a cornerstone of a solid investment portfolio.
Right. One of the biggest advantages of rental properties is the ability to generate regular cash flow. With average rents for two-bedroom units ranging from $1,500 to $1,800 a month, depending on location and amenities, you can count on a steady income stream. Moreover, there are additional benefits like tax deductions for mortgage interest, property depreciation, or other expenses. However, it's important to note that managing rental properties requires hand-on work. You will need to deal with tenant screening, maintenance issues, and occasional vacancies. which might prompt some investors to hire a property management company, even though that will reduce your net returns.
That's a crucial point. For many, rental properties serve as an accessible entry point into real estate investing. They allow investors to learn the intricacies of the market while establishing a foundation for long-term wealth. The challenge, however, is the paperwork and managing these properties effectively. Ann Arbor requires a license to rent property, and this costs $500. You can read more about this in our investment guide, which can be found on our website, annarbordreamhomes.com. The time commitment and potential for unseen expenses can also be significant, so it's vital to weigh the benefits against the responsibilities involved.
Let's move on to another strategy, fix and flip investments. This approach involves purchasing properties that need some renovation, making the necessary updates, and then selling them for a profit. It can be particularly lucrative in neighborhoods that are on an upswing. For instance, consider a property in the Old West Side that's priced below market value due to outdated features or cosmetic issues. With the right improvements, you can significantly increase its market appeal and resale value.
Fix and flip projects offer the advantage of potentially quick returns, which can be very attractive if you're looking to reinvest your capital in additional projects. However, this strategy comes with its own set of risks. The renovation process is often unpredictable. Costs can escalate and delays may occur. In a market like Ann Arbor, where property values have been rising at rates of 8 to 10% year over year in certain neighborhoods, there's pressure to complete renovations swiftly and efficiently to capitalize on the upward trend.
Exactly. The key to success with flip and fix is solid planning and budgeting. It's essential to have a realistic estimate on renovation cost and to build a contingency fund for unexpected expenses. Also, timing is everything. The longer a property sits on the market during renovations, the more you incur additional costs such as mortgage payments, property taxes, and utility bills. The risk is here that if market conditions change during your project, your expected profit margins might shrink considerably.
In addition to rentals and fix and flips, another viable strategy is the long-term hold. This approach involves purchasing a property with the intention of keeping it for several years or even decades. The goal is to benefit from gradual property appreciation and steady rental income over time. In a stable market like Ann Arbor, supported by factors such as the University of Michigan, robust job growth, and a diverse demographic profile, long-term holds can be a very prudent strategy.
Long-term holds are attractive because they allow investors to ride out market fluctuations. The idea is to benefit from compound growth and to build equity steadily over time. Investors who opt for this strategy often refinance later to pull out equity, which can then be reinvested in additional properties or improvements. While the returns might not be as dramatic or immediate as those from fix and flip, the predictability and the reduced risk make long-term holds a reliable option for many investors.
One of the major benefits of long-term holds is their resilience during economic downturns. When sales slow down, rental demand typically remains strong. Given Ann Arbor's low unemployment rate, often below 3%, and the steady inflow of students and professionals, properties held for the long term can continue generating income even when the market faces challenges. However, the trade-off is that your capital remains tied up in the property, and liquidity can become an issue if you need to access your funds quickly.
Beyond these primary strategies, there are also other approaches that can be used for your investment portfolio. Some investors in Ann Arbor explore commercial real estate or mixed-use properties. These ventures involve different challenges, such as understanding zoning regulations and evaluating commercial tenant stability. But they also offer the potential for higher returns and portfolio diversification. Commercial properties often come with longer lease terms, providing additional income stability. Yet they also require a deeper understanding of the business climate and market demands.
There's also an emerging trend of converting properties into multifamily units. In neighborhoods where single-family homes dominate, converting a property into a duplex, triplex, or even a small apartment complex can multiply your rental income. This strategy leverages the existing structure to meet the high demand for affordable multi-unit housing, particularly among students and young professionals who are looking for convenient and cost-effective living arrangements.
Now, regardless of which investment strategy you choose, one critical element is finding the right property. This is where true research and local market knowledge come into play. Start by investigating neighborhood trends, school ratings, and upcoming local developments. For example, if a particular area is slated for a major infrastructure upgrade or a new public transit project, that could signal rising demand and an opportunity to invest before property values climb even further.
Networking locally is another invaluable tool. Building relationships with real estate agents, attending local investor meetups, and participating in online forums can provide you with insights into off-market deals and hidden gems. Sometimes the best investment opportunities aren't the ones that are widely advertised. Personal connections in the community can lead you to properties that are about to hit the market, giving you a competitive edge.
It's also important to align your investment strategy with your personal financial goals and risk tolerance. If you prefer a more passive investment that offers steady cash flow, rental properties might be the best fit. However, if you are willing to take on more risk for the possibility of rapid gains, a fix and flip strategy could be worth it. And if your focus is on long-term wealth accumulating with less day-to-day management, then holding on to a property for several years may be your ideal approach.
Let's not forget that real estate investing is rarely a one-size-fits-all endeavor. Each strategy has its unique set of challenges and rewards. For instance, while fix and flip projects can yield quick returns, they require a deep understanding of renovation logistics and a keen eye for market timing. On the other hand, rental properties might offer slower, more steady gains, but demand significant ongoing management. Meanwhile, long-term holds provide stability and the benefit of compound growth, yet they might also mean your capital is less liquid.
One thing we always emphasize is the importance of having a contingency plan. Real estate investments often come with unexpected challenges, be it unforeseen repair costs, delays in project timelines, or shifts in market dynamics. It's wise to maintain a financial buffer that can cover these potential setbacks. Being prepared allows you to adapt your strategy without losing momentum, ensuring that even if things don't go as planned, you can still navigate the markets successfully.
Before we wrap up this section, let's recap some key points. For rental properties, you gain the benefits of regular cash flow and tax advantages, but you also need to be prepared for the day-to-day responsibilities of property management. With fix and flip investments, the promise of a rapid return is enticing, yet the risks associated with renovation costs and market timing are significant. Long-term holds, meanwhile, offer steady growth and equity building, but they require patience and come with liquidity constraints.
Exactly. And it's important to choose a strategy that aligns with your overall investment goals. We would like to ask you, our listeners, which strategy resonates most with your investment style? Do you lean more towards the steady income and rental properties, the potentially rapid returns of fix and flip projects, or the slow and steady growth offered by long-term holds? We encourage you to reflect on your personal goals and share your experience or questions with us on social media.
And here's another thought to consider. How do you approach risk when deciding on investment strategy? Do you prefer to take calculated risks for higher returns, or do you lean towards more conservative, stable investments? Real estate, like any other market, requires a balance between ambition and caution. Understanding your own risk tolerance is crucial for making informed decisions that will stand the test of time in Ann Arbor's competitive market.
One final tip for those looking to get started: always keep learning. The real estate market is dynamic, and staying informed about local trends, regulatory changes, and emerging opportunities can significantly enhance your decision-making process. Attend seminars, read local market reports, and don't hesitate to consult with industry experts when necessary. The more you know, the better you're equipped, and you will be able to navigate the ups and downs of investing.
By thoroughly researching your options, networking with local professionals, and aligning your investment choices with your financial goals, you set yourself up for long-term success. Remember, the journey in real estate investing is a marathon, not a sprint. Each strategy, whether it's a rental, fix and flip, or long-term hold, has its role in building a diverse and resilient portfolio.
Let's get into one of the most critical aspects of real estate investing in Ann Arbor: financing and legal considerations. When it comes to financing your investment, you have a few routes to explore. The most common option is obtaining a traditional mortgage. Banks and credit unions here offer competitive rates, especially given Ann Arbor's stable market. For instance, you might secure a mortgage with an interest rate in the low to mid 7%, 6.5% range in a fixed rate loan, which can help you lock in a predictable payments over time.
Absolutely. Mortgages are a staple for many investors, but they're not the only option. Many investors also look to private investors and partnerships. Private investors can provide more flexible terms and faster approvals, which is often crucial in a competitive market. For example, if you're eyeing a promising property that needs quick action, tapping into a network of private investors could be a game changer. Partnerships, whether with another individual or a group, also allow you to pool resources and share both the risks and the rewards of an investment.
All right, and partnerships can be particularly beneficial when you are planning on larger projects like multifamily units or even commercial properties. By combining expertise and capital, you can leverage each partner's strengths. However, it's essential to have clear agreements in place. Defining roles, responsibilities, and exit strategies upfront can help prevent conflicts down the line.
Another financing option to consider is seller financing. Although less common, some sellers may offer to finance the purchase directly, which can be an attractive alternative if you're looking for more flexible terms. This method can sometimes allow for a lower down payment or more lenient credit requirements, making it a viable option for new investors or those with less traditional financial profile.
Moving from financing to legal considerations, it's important to understand that every market has its own set regulations. In Ann Arbor, zoning laws and building codes play a significant role. For example, if you are planning to convert a property from a single-family home to a multi-family unit, you will need to navigate the local zoning regulations. Ann Arbor's zoning ordinances are designed to maintain the city's character, which means that any changes to a property's use need to comply with strict guidelines.
That's a crucial point. It's not just about the financing. Legal compliance is equally important. Before making any investment, you should familiarize yourself with local zoning rules, especially if you're considering a fix and flip or a conversion project. In some cases, you might even need to apply for variances or special permits. Working closely with a local real estate attorney who understands Ann Arbor's specific regulations can save you from costly legal headaches later on.
Speaking of legal aspects, it's also vital to be aware of any tenant-landlord laws if you are planning on renting out your property. Ann Arbor has robust protections in place for tenants, which is great for tenants, but means that as an investor, you will need to be meticulous about lease agreements, maintenance responsibilities, and eviction procedures. Understanding these laws not only help in avoiding legal disputes, but also in setting realistic expectations for your rental business.
Exactly. And while we're on the subject of legal matters, Let's touch on the tax implications and incentives available locally. Real estate investors can benefit from several tax advantages. For example, there are ways to limit how much you pay on capital gains.
In addition, mortgage interest deductions can also be a major benefit. The interest you pay on your mortgage is tax deductible, which further enhances the financial viability of your investment. Moreover, Ann Arbor and the state of Michigan sometimes offer specific incentives to encourage real estate development and investment. These incentives may include tax credits or deductions related to energy efficient renovations and historic preservation projects, which can offset some of your initial cost.
Another incentive to consider is the possibility of utilizing a 1031 exchange. This tax deferral strategy allows you to reinvest the proceeds from a sold property into another like-kind property without paying capital gains taxes immediately. It's a powerful tool for investors who are looking to grow their portfolio over time while keeping more of their capital working for them in the market.
While these tax benefits and incentives are enticing, it's important to consult with a tax professional who is well versed in real estate. Tax laws can be complex and may change over time, so having expert guidance ensures that you are taking full advantage of available benefits while remaining compliant with all legal requirements.
Another aspect worth noting is the importance of due diligence in the financing process. Whether you're working with a traditional lender, a private investor, or entering into a partnership, make sure you understand all the terms and conditions. Look at the fine print, interest rates, repayment schedules, and any penalties for early repayment, as well as all associated fees. This level of scrutiny helps you avoid surprises down the line and ensures that your investment is financially sound.
And don't forget, securing financing is just the first step. The legal framework around your investment can be just as critical. For example, if you are considering a partnership, drafting a detailed operating agreement is non-negotiable. This document should outline everything from profit sharing to dispute resolution processes. Having a clear agreement in place helps protect all parties involved and lays a strong foundation for your venture.
Also, if you're investing in properties that might require renovations or a change of use, it's wise to consult with local planning and zoning offices early in your process. Understanding what's allowed and what isn't can save you both time and money, preventing potential delays or even fines that could derail your project.
Let's recap these key points. First, explore a variety of financing options. Traditional mortgages, private investors, partnerships, and even seller financing can all be viable, depending on your situation. Second, make sure you are fully aware of Ann Arbor zoning regulations and legal requirements, especially if you are planning on modifying a property, use or converting into a multifamily unit. And third, leverage available tax incentives and benefits like depreciation, mortgage interest deductions, and 1031 exchanges, but always consult with professionals to maximize these advantages.
Remember, the financing and legal side of real estate investing might seem daunting at first, but with thorough research, professional advice, and a proactive approach, you can navigate these challenges successfully. Your ability to secure the right financing and adhere to local regulations not only protects your investment, but also sets the stage for long-term success in Ann Arbor's vibrant market.
Let's address the most common questions we hear about Ann Arbor real estate market. These questions touch on everything from pricing to legal considerations, and our answers are based on the latest trends and data in our area.
The most asked question is about the average home price. Currently, the average price in Ann Arbor is around $450,000. Of course, this number can vary by neighborhood. For instance, areas like Carytown tend to be a bit higher, while more family-oriented neighborhoods like Burns Park might be slightly lower. Understanding these differences is key to making the right investment decisions. The next question is, which neighborhoods offer the best investment potential?
Great question. In fact, all of Ann Arbor and many of the neighboring areas, property appreciates yearly. Ann Arbor is known for its diverse range of neighborhoods, each with its unique appeal. Some popular areas to invest include Carytown, for example, known for historic charm and modern amenities. It offers strong growth potential with properties averaging around 500,000 and 8% year-over-year increase. Old West Side. This part of the town is gaining value almost 10% because it's close to the downtown and it's so vibrant. And Burns Park, favored by the families for the school district because of the school district, the house prices are changing from around 430,000. Your choice will depend on your investment goals, whether you are after rapid appreciation or steady rental income.
Next, people often ask about financing. There are several financing routes available. Most investors start with traditional mortgage, where competitive interest rates often fall in the mid 6% range. Beyond that, you can explore options like private investors. These can offer more flexible terms and faster closings, which is crucial in competitive markets. There's also partnerships. Pooling resources with others can help you tackle larger projects or diversify risks. Finally, seller financing. Occasionally, not very frequently, sellers may offer financing directly, which can be especially useful if you're looking for lower down payments or alternative credit requirements. Each option has its benefits and risks, so aligning your choice with your financial situation and investment strategy is vital.
The next thing is local regulations. Ann Arbor has strict zoning ordinances designed to preserve the city's character. For example, if you are considering converting a property from single family to multifamily use, you will need to comply with specific zoning laws and possibly secure variances and special permits. Additionally, be mindful of the tenant landlord laws, which are robust here, ensuring tenant protections. It's highly recommended to consult with local real estate attorney to stay ahead of any regulation changes and ensure full compliance with these rules.
As you can see, the Ann Arbor real estate market offers a wealth of opportunities, but it also requires careful consideration of these common questions to navigate successfully. We hope these answers have shed some light on the key aspects of investing in Ann Arbor, from pricing and neighborhood selection to financing, legal hurdles, and tax strategies. Staying informed is the first step to making smart, profitable decisions. Thanks for tuning in, everyone. If you're serious about maximizing your real estate investments in Ann Arbor, be sure to follow our podcast for more experts' insights. Take the next step in your investment journey with us. Connect at annarbordreamhomes.com, where we're committed to helping you unlock the best deals in Ann Arbor's vibrant market.